good morning, good evening, good night. All depends on when you're watching this. All that matters is that you are watching. And if you have this on in the background just to have this on for background noise, that's okay too, because this video we're primarily going over psychology and just talking. This is just gonna be a chat. This is just a fucking chat. Let me go ahead and get myself right. Let me go ahead and get myself even, because it's gonna be lengthy, or at least I'm gonna try not to have it too lengthy, but it's going to be informational. We're going to be going over what I failed to go over yesterday, and I believe it was Friday. So within the past 3 days, I wanted to break down the utmost of importance, which would be the 3 pillars of trading. In order to be a profitable trader, you would need to have psychology. Well, first off and foremost, a way to determine whether or not you can tell which way the market is going, which would be an edge. From there on out, you would need to have a solid risk management plan that you abide by every single day. 2. Third pillar, and what we're going to be going over today. And okay, let me stop. Risk management isn't just all about how much money you're risking every single day. It's also how many days you're willing to trade, because ultimately you could have good risk management, but if you're continuously putting yourself out there in the market and exposing yourself every single day, what fucking difference does it make if you have a good risk management but don't know when to not trade, to save your capital, to save yourself to trade for another day? Yeah, if you're good enough to trade every single day, hey, go for it. But that information, that topic isn't meant for people that know what they're doing. That topic and that information is mainly pointed at people that are just getting started. You honestly, if you know where market is going, and if it's not in your bias, like if your guess is wrong for the day and the market is going against you, stop. Sorry, Mike. Just stop. Yes, you can go ahead and look for confluences to see whether or not shit is going to be reversing, but if it's not in your favor, just stop. Why? Because ultimately you can build the confidence to say, and not even just say, but you could build the confidence and the authority to just not do anything. Not exposing yourself too much in the market is going to ultimately save you. It's going to ultimately save you. So now, with that understanding in our pocket, we could go ahead and tuck that bitch and just pat it, make sure it's there, and let's continue on. The third, and I would argue the most important, I'd argue that this is the most important pillar out of the 3. I'd say, as an analogy, I'd put it like this. If, seeing as we're using the terminology, or not terminology, but we're using the metaphors like pillars, 3 pillars of success: edge, risk management, and psychology. If we're going ahead and using that thought process, that framework, what we do I'm trying to put this in the most simplistic way possible, and I'm overthinking this when I should be just just putting this very bluntly and very straightforward. When you're building a house, you don't necessarily want the foundation to be weak, correct? You want that foundation to be strong enough to hold the structure. Now, people that have grown up to think outside of the box, the people that are a little bit more on the spectrum won't necessarily get this right away, but we'll help you break this shit down. When you're building a house, let's say you got your foundation set up and you're wanting to build the skeleton. You ultimately don't want to go ahead and put the strongest pillar, the strongest piece on the outside. Why? Well, you can, but then you have different risks. But in order to build a very, very strong house, me personally, I would go ahead and put my strongest wall in the middle, or how to say this? Put my strongest wall in the middle, and then have the other two weak ones on the outside. Why? Because the middle piece is going to hold up everything, while the other two is just going to support the middle piece. That's the best way that I could break that down. So with that understanding, let's just move on. We have edge on as one pillar holding up one side of the wall. That's okay. That's strong, right? We have risk management, the other side. So the left hand side, we'll have edge. Right side, we'll have risk management, and in the middle is going to be psychology. It's like the middle pillar is going to be the foundation for the rest of the two. Now, if one of those pillars were to fall, the others do fall. But if we can hold and maintain strength in the middle pillar, the other two pillars will ultimately hold strong overall. It's going to take time, or not time, it's going to take a lot of repairs to have and continuously. It's going to take a lot of repairs to have that middle pillar or whatever pillar remain solid. But repairs are necessary to hold the foundation. We'll get to that in a minute. Now that we have the understanding that psychology is going to be the most important thing to Victor, we just need to break that. We just need to go ahead and break it all the way down. As I just pointed out before, you could have an edge, you could have risk management, but if you don't have psychology, or hell, it could be either or. You could have psychology, you could have edge, but if you don't have risk management, everything else fucks. Everything else is fucked. So let me put it in this way. If you have risk, you have an edge, and if you don't have psychology, you're fucked. I think that's how I put it the first way, but maybe not. But we're moving on. Point being is you need to have all three pillars remain solid. You need to have all three pillars, and while you're trading, remain strong. Why? Because if one of those falter, ultimately the rest are going to fall. Others are going to fail. You might get away quite a few times, or one time or another, scot-free without a consequence, just based on the fact that you thought you were doing something right, but doing something completely fucking wrong. The market will do that. The market will definitely reward people for doing something stupid. over and over and over and over and over again until the market does something completely different from what it originally did prior to them giving them that confidence and then just humbling them altogether. And then at that point, you're stuck with two options. Either I get better, I move on, and I do what needs to be done in order to remain in this industry, or two, fuck it, I don't want to do this. I assure you, a big part of you will regret the second decision if you make it. Because if you are in this industry and if you are really wanting to do this, you're bit by the bug. You're bit by the bug. You're bit by the trading bug. You could say that you're done, but I could promise you, if you're really in this, you're back on that chart looking to see what's up. Or you're back in that demo. Why? Why is that behavior happening? Because you're not fully done. You're still wanting more to this, but at the same time, you're thinking you're wanting to quit, but in reality, you just want to break. You just want to break, and that's okay. To take the break, take your break. But that's not what this is. We're moving on. But it actually ties into psychology very well. I'm really hoping I'm not echoing, but who knows? Without psychology, everything else will ultimately fail. Without the proper headspace, without the proper mindset, you can either, with the proper mindset, you could grow into a fabulous trader. With the proper mindset, you have the understanding of, I don't need to make $1,000 every single day. With the proper mindset, you are able to understand small wins equal up to bigger wins later on. With the proper mindset, you're able to take a loss and accept it. Move on and do better. Where if you don't have the proper mindset, let me back up. If you do all those things that I just mentioned, you save yourself just a little bit. You would save yourself just a little bit of headache. You would save yourself from just a little bit of heartache. You would save yourself from endless of sleepless nights trying to get this shit right. And on top of that, you'll save your capital. Because if you don't necessarily do the first options that I've mentioned, the end results of that is the second play out, which would be you not having a proper mindset. So, in turn, you're risking more money. You don't have the proper mindset, so you're making yourself more exposed by putting yourself into the market when you shouldn't be. Why? Because you're not thinking properly. You're not thinking, is my setup going to work? What you're thinking is, how much money can I make? Or, worst of all, is not how much, but I need. You see the difference there between how much or I need it? With the second option, you're imposing your will onto what you want to do, and that's not how the market moves. Without a proper mindset, you're overtrading. And that also ties into overexposure. You're getting the good feel for what I'm about to go ahead and just lay on to you, and that is, if you continue on with the second mindset and not have proper psychology, and if you don't know how to regulate your own emotions properly, this is not for you. This is not for you. And hell, even if you, let me time out. Even if you don't know how to regulate your emotions, trading can possibly help you do that, because trading is just a a reflection of yourself. Trading is just a reflection of yourself. It will show you all the faults that you have. It will show you all the pros that you have. It will test your limits. It will test your patience. Trading will force you to get and do better. Because again, everything that you learn in trading can be applied to in real life. Let me use weed as an example. Let me just use weed as an example. For the people that are not able to buy weed on a consistent basis and are stuck to a paycheck of 2 weeks, like that's the only time that you are able to like confidently say I'm picking up. If you're let me go ahead and apply risk management here. Me personally, I would be I smoke one hitters. I microdose for a very good reason, and that is because it saves my weed overall. Am I smoking the exact same amount as this bowl? Yes. Am I having a full bowl pack? Yes. But it's in small increments. Like in this instance, this is your whole fucking account. Imagine this is your whole account. All this is all your money in your account right now. If you're not having good risk management, if you're not having a good psychology, if you're not thinking right, your shit goes up in smoke. And all you're able to do then is just watch it burn. Where if you had good risk management and learned how to control your risk, me personally, this is how I did it. This is how I'm learning to balance out my risk. And I've done this well before even trading. So it was just like me applying what I knew about this and just using it with trading. I smoke my one hitter because within a second, I can have my weed disappear. Where my one hitter, this is a dugout for people that don't know what this is. A dugout holds your one hitter on this side. It has two holes. It has a hole for your one hitter and a deep hole for your weed. Able to carry this around, yada yada. It's more convenient than the bowl. You're able to go ahead and put your weed. I don't know if you guys could see that. I don't want to tip it over and have it all spill. But if you could see that, you could pack this bitch pretty deep and pretty hard. I could go through this within 2 days, in a day and a half, and to consistently smoke this for a day and a half and go through just about a third and save myself. Like this bowl pack is just about maybe a quarter, not even a quarter. The amount of weed in here would have equaled out to just about a pinch of weed from the grinder. I wanted to use that as an example, but it's too fluffy. That pinch would have equaled out to multiple hits. I learned over time that if I could just go ahead and change the mindset from I need a lot of weed to get me high to if it's good enough weed, I only need several hits and I'm fried. Anything more than that, I'm just being greedy. So in order for me to save my weed from paycheck to paycheck, I had to go ahead and smoke my one hitter. Now, once I upped my money, I didn't necessarily have to do that anymore. You know, I was fucking balling. You know, I wasn't necessarily smoking my bowl. I was smoking blunts. I had it like that. But now that I'm back at square one, now that I'm repairing myself, we have to change the mindset to make the foundation stronger, to last longer. In order to do that, I needed to change the way that I was thinking. In order to change the way I was thinking, I needed to go ahead and change what the belief about what I was doing. I needed to change my belief, because the belief was I needed all that weed just to feel good, and like, not even feel good, but just like get a proper high. But again, with the understanding of if it's good enough weed, you don't need that much. You don't need that. You don't even need a blunt. You don't even need a full blunt. Like, I'm not gonna knock people that smoke blunts. I'm with you. I'm 100% with you. I'll roll up a fucking finger with you. I don't give a fuck. But at that time frame, at that point, if I have it like that, I don't necessarily give a shit. Risk management is there, but it's not applied like it is when I can't roll up blunts every day. Gotta keep it small to last longer. And with that understanding, we could go ahead and use that with trading. We don't want to be using so much capital. We don't want to be using so much money. So say, like, honestly speaking, $150 with maybe a 5 micros, with a 5 micro contract, would give you guys $600 or more. Yeah, like, you can, if the trade is working out in your favor, you can do that. Let me show you. Let me see if I can pull up TradingView really quick. And so the reason why I'm choosing today to go over risk management is because it would have been the perfect day to do it. Why? Because I ended up blowing my accounts. I had just about, sorry, I'm trying to get this good. I had just about a day, or no, let me back up. So when you do your subscriptions for your evals, they are, I know the screen is black. I'm sorry. I'm trying to fix that. When you do your subscriptions for the evals, they are if you're good enough, if you're solid as a trader, you honestly don't need the whole month to pass the eval. You realistically only need about just 2 weeks. Hell, even a week. You could honestly pass that bitch in a week. I did it. And I did that without even having risk management on fucking point. Although my strategy, I had full confidence in. Why? Because I practiced, I backtest. I know it works. I just need to fucking follow it. If I don't follow the strategy, I fucked up, and that's the only reason why I failed to trade. Literally, like, I shit you fucking not. I did something wrong in order for that trade to play out in the opposite way that I thought it would. I fucked up somewhere. But if I follow those rules, I played out. And I'm trying to prove that. But I can't seem to go ahead and bring y'all up. So here, let me just do this. 2 seconds. Was it browser? Window capture. And it still doesn't work. What the hell? What the hell? Do I have 2 of them up? Sorry guys, I wasn't. There we go. I don't know why I wasn't showing before. Sorry. So my mentor is doing a 30-day live. This motherfucker right here just passed his eval. I'm so proud of you. I'm so proud of you. You guys, if you guys have been watching me, I mentioned him like last week. He messaged me asking me some questions and this, that, and the third. Just creating conversation. So he is with Tyler right now, and Tyler is pretty much trying to teach him how to be a profitable trader. This is day 3 of them trying to pass their account. Well, trying to pass his account. And guess what? He just passed his account today. So let this just be fucking proof. Like he made 200 bands. He made 200K today, or maybe just about 200K, where he made 6K across 3 accounts. So he's teaching him how to do this the proper way, and it only took him 3 days to do it. If you know what you're doing, my whole fucking point of ranting into that was, if you know what you're doing and have good risk management, good psychology, good edge, you could do your shit. You could pass your eval within 3 fucking days. So, although I blew my account, I did go ahead and smack the dog shit out of this. My point being was, if you can still make money, like I made I would have made $641 today. Oh my goodness gracious. This is what I texted Stephanie earlier. I would have passed my account. I would have passed my eval today if I did not hold my gold trade overnight and let it fuck me. I would have passed the account with this today and let it be that. Moral is, we're moving the fuck on. That's what the fuck is. You can honestly, the whole point of me bringing this shit up was, if you know what you're doing, you can make hella fucking money. You don't even need to make that much money, but you could walk away with $641 fucking dollars on the goddamn day within a matter of like 30 minutes. Within a matter of 30 minutes, you could just bust that bitch out and have it be so. It's very fucking simple, and I necessarily would not have made that much money back or forward testing if I didn't know what the fuck I was doing. What my job is to teach you guys what to do, what not to do. I don't want you guys to do exactly what I do. I don't want that. What I want you guys to do is think independently. I want you guys to use the tools that I am willing to go ahead and give you and apply them in the appropriate way, so that way the outcome can be in your favor. I guess I was about to go over how I blew my accounts. So Monday, yeah, we're just gonna keep that shut for now. Monday, back up. There is a time frame for your subscription. If you don't meet if you don't meet that time frame, you got to pay again to keep the account alive. If you fail to do that, then you don't have the account anymore. Well, right now I don't have the extra $111 that it took to keep that account alive, and I had until today to go ahead and pass it. Once you pass your eval, you don't need to pay your subscription. You're funded. All you got to do is treat that account as if you're an actual, you're a professional trader. At that point in time, you are a professional trader looking to act and think like a professional. Professionals don't go out there over risking all the time. They don't go out there acting a fucking fool in the market just because shit isn't working right. Once you're funded, you don't have to worry about that. You don't have to worry about paying the subscription. I, again, did not have the extra funds to go ahead and dish out to keep this account alive. My only option was to trade outside of my time zones and into a different index. Well, I'm used to this index that I'm about to bring up. I wouldn't say I'm used to it, but I practice on it enough to understand the behavior, and with the understanding of my edge, it just helps me all that much more. It just helps me that much more with my confidence to say I can do this. Well, Sunday night, let me stop. Friday, around 4 o'clock our time, market closes completely. Market shuts down for Friday and Saturday, and a little bit of Sunday. Market opens once more on Sunday at 5 o'clock. You could resume trading then. I wouldn't recommend trading on like the NASDAQ and the S&P, but gold, shit like that, if you know what you're doing, go for it. Well, it kind of just played out in my favor. If I would have just did it right. Over the weekend, or on Friday, I think, we went ahead and bombed Iran. And that created war news, which in turn created gold to be a safe haven. Gold is always a safe haven. Gold is always a safe haven for when the US dollar goes to shit. And as of lately, the US dollar has been going to shit, so which in turn has gold rising. With that information, keep it in the back pocket. With that being said and done, I knew gold was going to be beautiful. It just needed to wait for my confluences to play out. I can't even go back on my account to show you. Even if I wanted to, I can't even fucking go back. Sunday opened. I initially missed my first move. My bias was bearish or bullish, I'm sorry, which means up. My whole bias was that price was going to go up for the night and continue the same direction that it was going. And I was busy. I was doing some other shit while trying to trade, and I initially, I feel like I'm saying that wrong. I initially missed that first entry. Whatever, yada yada, not crying about it. Found my second entry and completed the trade beautifully. Did that very same setup 3 more times and it worked out fine. Fourth trade that I took on that was a bummer. It was like a $60 loss. At the end of Sunday, I was at $491 for the night. Cool. Awesome. That's beautiful. That's literally 2xing what I would normally make on a regular New York session. Although I can make more, I just choose not to risk more. This time around, I'm risking more to make more because I need this account to get to 2,500 bytes a night. That was the thought. That was the goal. I needed to get the account to 2,500 bytes a night with respecting the consistency rules that Tradeify that gave me, and also respecting the rules that came along with the account. So we were good. I was beautiful. Monday opens up, New York session opens, and I believe I took a winning trade. I won that trade, but it wasn't all that much. But no, I can't even go back. Like, I want to go back, and I just can't. Here, hold on. I think I could actually go into my Tradeify account. You guys can't see this, but you will. 2 seconds. I could go back in my Tradeify account. That will have all of my journal days. I am so sorry, guys. Hopefully that's the right camera angle. It is. Beautiful. We're in that bitch. Alright, so failed all of these. Gosh, I don't even want to fucking look at that. Anyways, so we went ahead and I need the first. Is this even the right account? Second. This is the right account. Is it? Yeah, you're the right one. Fourth, second. It's not giving me. What was the second? It's only giving me till Monday. It's not giving me Sunday. Whatever. Anyway, so that initial balance that I made to $491, I pretty much lost. But I think this is gold. It doesn't even fucking tell me which instrument I went in on. Anyways, so the next day. The fuck? Hold on. I am so backwards right now. 227. 226. Am I just high and just fucking reading this wrong? 3.2, 327, 326, 319, but then if we go down, we go over. What the fuck? This is beginning of the month. Fucking idiot. I'm just high. Alright, so this. Y'all ain't. You guys did not give me the information for. This is the 27th. The 27th. You guys are not giving me the information for Sunday. That's what's throwing me off right now. Are you guys including. Okay, so. The reason why it's not giving me Sunday is because it bled over into Monday and then just added into this. That's whatever. So with the initial balance of that Sunday, I was at $491. I then took 16 more trades, as you can see, 10 times. That's like fucking 10xing my shit that I usually take. We had a few good trades, but then I held my trade last night, which then took the account into the negative $300, which breached and fucked me over. Now I can choose to reset, but if I reset, then it would cost me, I think, resetting, whatever. So resetting would get my account back, but it won't necessarily do much of anything because I would still have to go ahead and pay the $100 that it would take for me to keep the account alive. Anyways, back onto psychology. I got myself fucking twisted up there for a second. Back onto psychology. The old me, while looking at this, honestly, I would be tilted. I'd be thinking, what can I do to change my strategy? Like, how? I wouldn't be thinking how I could change my strategy, but I'd be thinking, what can I do to do better and get better? And I'm not gonna lie, there was a point in time where I, like recently, where I had everything figured the fuck out, but overthought everything, which then caused me to want to learn more when I didn't really need to learn more. But the old me, while looking at just this account, like this account right here, this account was my baby. This account was my baby. I got this and I passed this account and failed it the very next day. This sent me into a full complete tilt, and I told myself I don't need to necessarily work on anything beyond risk management, and that's it. After I get down risk management, I will be okay. Which then brought me over into these two accounts. I breached this account just because I fucked up by not marking up, but in your bracket order, you'll have, if you're doing it right, you'll have take profit. Say if you're looking for a buy, you have take profit, and then at the bottom you'll have your stop loss. If you're playing, you'll set your risk, you'll set your take profit, and then you'll go on with your trade. And if it's playing in your favor and you feel like you want to go ahead and add a contract in, you could do that. Well, I did that, and I really fucked myself over. While adding into the contract, I seen that it placed my stop loss in a different area than I originally wanted it. So I then moved my stop. I seen price coming back down to hunt for the lows, which would have stopped me out. Well, I closed out. You have the option. I would not recommend this, but you have the option to take away your stop loss and hell, even take away your take profit levels for your bracket, and then have price just float. And then if you want, you could kill the trade where you feel comfortable losing your money, or if you hit the amount of money that you want, you could just take it from there. The only issue with that, if you choose to go about that route, you are ultimately 100% gambling. I'm going to repeat that. Without a stop loss, without a take profit, you are ultimately fucking gambling. Will the trade play out in your favor if you have a strong bias and if you follow your rules? While doing all that, yes. Will the trade play out in your favor? Yes. let's say if you don't have a good strong bias for the day, let's say you don't know where the structure of the market is going to go for that day, and you do the exact same fucking action that got you that other trading win. No bracket, just floating order. And let's say price comes down and says, fuck you. Well, now instead of having that take that, and what would have happened originally was if you were to set your stop loss, I could be doing this like this. If you, let me see if I'm back. Okay. This is your take profit level. This is your stop level if you're looking for a buy. Now say if price wanted, I'm trying to look for a bad. Right, let's do this. I was gonna try to compare it up to that, but fuck it. Let's say if price comes up and you think it's gonna come up here without your take profit level. Hell, let's do this. I don't give a fuck if I lose money right here. What are we? We're in gold. Let's see if we go long. Let's say, oh, I think gold is gonna go up just based on what I see right now, right? Now, if I were to do this, and I think price is going to go here, I enter into the order. Let's say I want to risk 500 to make 1,100. Now price is going to move because that's just how it is. You just got to determine how many contracts you're using to make how much money you're going to, or how much you're going to risk to how much money you're going to make. It needs, this risk amount needs to be on par with your risk management. So say me, that's perfect. That's perfect. Right? So let's say I'm in the order, I'm looking to go, but I get scared that price has the opportunity to come down here and take me out. Well, let's say if I wanted to close out the position and I say, yes, confirm that. Well, now I don't have that stop loss to protect me. So what would have done was, if price would have came down here, tapped into this level, this whole order would have taken me out. No more money. That's it. I would have lost the $168. Now that I took away the stop loss, if price comes down here but further, I am losing more money than I originally went into. Now let's say I don't like where my take profit is. Yeah, I want to confirm that. Well, now we're just floating. When you're in a real order, you will not see this. You won't be able to see your take profit. You won't be able to move your stop loss. The only way for you to do that is for you to make another order ticket, come into your limit, do some math, plug in the information, and then put in your limit. I don't know how to do that yet, so I'm not even gonna fucking I'm not gonna flex, because this is where I was. This is where I was. I thought that putting back your take profit level and your stop loss level was going to be as simple as this shit, but it's not. It's not. You have to make a new order ticket. You got to go into your limit. You have to come down, like, see right here, move that. So that will be your stop loss, and then you'll plug in the information. Look over here in price. Plug that into stop loss. And I think that is the new stop. Yeah, but still. Yeah. You see that stop, that sell stop? that was, I believe, I believe that was the stop loss. But I don't have full confidence to say that's how that's supposed to go. So I just left everything as is, and I had faith that gold was going to move in my direction, just because I knew where structure was going to go. But gold does not behave the exact same way as the S&P 500 or the NASDAQ does. Gold goes off of, again, what the US dollar is doing. So say, like, let me put that, the best way I can explain this is, if the US dollar goes down, gold has the opportunity to go up. If gold goes down, the US dollar has the opportunity to go up. They're backwards with each other, but they both sometimes help one another gain momentum in the market. So you could see gold went up, the US dollar went up, gold went up. Right now, they're both acting the same. US dollar is going down, gold is going down. So as of right now, we're seeing a very strong corresponding pair between these two. But ultimately, when you're making your trade off of these, you want to see these two indexes looking the opposite. You want to see so if you're looking for the long, you want to see US dollar make a complete shitter on a higher time frame, where gold on a higher time frame, so you want to see this shitter move on a higher time frame, where gold will start making that retracement up. It is now shitter retracement, but gold isn't making that deep of a retracement up, just because that's not the natural trend for it. This is where I got fucked yesterday. So my bias was, if we were to continue, so this was around 11 o'clock last night, just around here is when I should have been thinking about killing the trade. But I told myself we respected this fair value gap on the 1 hour. Now, if we were to have continued on with respecting this fair value gap, we were going to go look for these highs at the top. But if we were to go ahead and inverse this gap, we were going to go ahead and start seeing a change in direction. Around 11 o'clock last night is when I started to stop trading. I was already in the trade, but I told myself, hey, if it plays out, it plays out. If it doesn't, it doesn't. Whatever. That's not the right mindset I should have had. Looking back on it, I'm like, hindsight, should never have done that. But I said, fuck it. My take profit level was right here, and I did not have a stop loss. So if it floated and hit take profit, good. If it floated and just took a shit, it took a shit. Well, as you can see, just around after 11 o'clock, 12 o'clock opened, this candlestick came right down. If we go back into the 4 hour time frame, this is where it really does matter. The 4 hour went ahead and broke structure underneath this low right here, which in turn, if we jump down to the 1 hour, gave us equilibrium to see which way price was going to go. Now, if we were looking for that sell, it was, hold on. If you're looking for a sell, swing high to swing low. At this time, we're looking at this high to this low right here. Isn't it? Yeah. All right. And then from there, what am I looking for? If I was up, what I have been looking for from there on out was to see if price was going to go ahead and respect this continuation confluence down. And what do you see? What am I looking for to see if it's going to continue down and respect this confluence? I want to see price come up, come down, touch into the middle of this 0.5, so then go into a smaller time frame to look for a break of structure out of this area right here. And what do you see? Well, you probably don't see it, but it's screaming at me. It's fucking screaming at me well before we get that inverse. We get the break of structure on the 15-minute, which then just caused price to take the shit. Now, throughout this time, I'm actually fucking banging right now. I'm actually fucking banging right now. Let that motherfucker hold. No confluences. See, this is what I was talking about earlier. Like, the market will reward you for doing the dumbest shit. Just just looking to see where, like, just the market would just reward you for doing the dumbest shit. If I would have seen this, hell, not even look, time, pause. I'm gonna be completely fucking fair with you. Before any of this happened, I was already thinking to myself to kill the trade. We could not break structure. We could not break. I was looking to break structure to the upside. You see this right here? I told myself I need price to come up here, break structure on the 15-minute or the 30-minute, to then have price continue on, just in case, just as long as we did not inverse this gap. Well, we couldn't get the breaker structure to the upside, but we did get that breaker structure to the downside on a lower time frame. Plus, on top of that, we inversed this 15-minute or this 1 hour fair value gap, which created the inverse to just have price capitulate straight to the downside. Now, I was at $50 up here at 11:30. At 11:30, I was at a negative $50, but the account would have just had me at it would have been good enough for me to wake up today, make this, and then pass the account. But my psychology was off, and I said, fuck it, let's go gambling. Aw, damn it. Aw, damn it. I wish I had that fucking sound playing. Let's go gambling. Aw, damn it. Aw, damn it. Aw, damn it. Like, that was me. That was me all throughout here, but I was asleep. Like, I woke up. I actually woke up quite a few times throughout the night. I didn't look at the time, but I did look at my phone, and there was a few times when we were here. This was $800. This is where I definitely should have killed the trade. But then I said, fuck it. We're going to come back up, right? We were already, if you could see here, I entered in a little bit sooner. If you could see here, we were consolidating back and forth, or over here. I'm sorry. We were consolidating back and forth. So I said, fuck it. I'm going to get used to the drawdown. What do you see here? A bunch more of a fucking drawdown. At this point, I was at like $400, $600 down in drawdown. So I said, fuck it. Like, I'm used to it. I was already in drawdown before the day prior. I'm used to feeling that anguish and holding it long enough to see price rise. Well, guess what? If I again stayed up and seen all of that play out, I would have just had more confidence to say right here, fuck you, I'm gone. Actually, no, I wouldn't have, because last night, honestly, I'm just lying to you. Last night, I would have just let that bitch held until we broke structure on the 15-minute right here, and then when we got here, I probably would have just waited here for the price to come back up, test these levels, to then drop further, to then kill the trade here. Because at that point, I'm already, the 1 hour fair value gap has already been disrespected. This right here was going to determine which way price wanted to go. Am I fucking lying? Am I fucking lying? No. So, back onto psychology. If I was just thinking in the right way, if I would have just been comfortable with the fucking what, $300, $400 that I had made last night, and not want the addition, because really though, honestly, the only thing that I was shit, this is gonna blow your mind. This is just greed. This is just greed. And before I go off and do that, you can see that price is coming back down. We're gonna see if it actually blows through this stop, and I want to show you how much more money you guys would have lost. So this would have been the $168. Keep that in mind, $168. This was my take profit level. And this was what I was trying to reach. I wanted an additional, on top of what I originally had. I was positive up here. I wanted an additional 12 points. Well, 13 points. I wanted an additional 13 points up to just have $300 fucking dollars. That's literally it. Just $300 fucking dollars. But me being fucking greedy and wanting that additional 12 fucking point move cost me the whole account. Not having the proper mindset that I should have had of killing the trade sooner when it showed, or even hell, getting a full breakdown top down from bottom up, or top bottom. You know what the fuck I'm trying to get at. Just doing a top down analysis, I would have seen that price was starting to go ahead and inverse the gap. Or better off, because I've done this before and it's fucked me overall, not going to fucking sleep when you're in the middle of a fucking trade. Why? Because you don't see what's happening. You can't get yourself out of a fucky situation. And even if you do wake up, check TradingView, and you realize that you're like last night, like let me use myself as a fucking example. Like when I woke up and seen $800, that should have been the fucking cue to kill the trade. But I'm half asleep and wasn't looking at the prior confluences that I was looking at prior to tell me that price was shifting down. What I was fucking looking at was just a price. How much money am I losing? How much money am I making? With that kind of fucking mindset, that's ultimately not giving too much of a fuck and just saying fuck it is what really fucked me over. I would have passed the account with this trade that I took today on NASDAQ. I would have passed the account. This trade was fucking beautiful. This trade was fucking flawless. NASDAQ, although was not the strongest, not the leading index to the downside, it definitely treated me right. I was able to go ahead, like, I'm not even going to break it down. I should break it down. I'm going to break it down. We had a 1 hour fair value. We had a 1 hour SMT divergence happen to the upside. NASDAQ was able to go ahead and blow through this hourly high for London, where ES could not even manage to come up to that level. What does that tell me? That's a higher time frame SMT divergence. What am I looking to do then? Looking for the 5-minute break of structure to show me that price is done with the SMT divergence. Without the break of structure to show me that orders are filled, price has the opportunity to come back up higher, to instead of coming lower and wanting to seek out liquidity to the downside. Price had the opportunity, without the break of structure, to show me it's wanting to seek out these highs. So we could claim that the SMT divergence is there, but without orders being filled to the upside or the downside, it doesn't necessarily mean too much of fuck all. So back on to point, we see the SMT divergence. We need a 5-minute break of structure to the upside. We don't get it here. Do we? SMT. What the fuck? What the hell? Or is it the downside I'm looking for? Okay, I think I'm looking for my dumbass. Alright, so I'm so sorry. One thing that I did forget to leave out was if you're actively seeking out low time frame liquidity, high time frame liquidity to the downside, you're looking for red candles. If you're looking for a high time frame liquidity to the upside, it's going to be the blue candles or green candles. So what I should be looking for is not blue candles, it's the fucking purple candles. Did we get a break of structure after all this? So right here's the low. We get that break of structure. I want to make sure that this shit's accurate. I know I got to break a structure. Yep. So it wasn't a very like strong break of structure. Wait, I'm on the wrong fucking one. I mean, either way, same shit. But let me actually go on to the fucking index that I actually traded. Anyways, break of structure or SMT divergence. I am then looking for that break of structure to the downside. We got the low right here. Was I able to get the break of structure with this? No. Was I able to get the break of structure with this? No. Was I able to get the break of structure with this? Yep. Cool. Wait, I got it backwards. When it comes, I'm so sorry. I am so fucking high. When it comes to the SMT divergence to the downside, we're looking for the upside to get filled, to show that orders are filled to the upside. Or orders are filled to the downside and looking to continue up. I am so sorry. I am so sorry. I gotta get better at explaining myself. So, same thing. We got the break of structure here. We got a high, we got a low, here's the high. Did we get a break of structure here? No. Did we get a break of structure here? Yes. So, then, what am I doing from there on out? I'm just waiting for the EQ to go ahead and get filled. I have EQ here, down to here. So if I'm looking for a buy, swing high to swing low, we're looking for this middle piece to go ahead and get touched into. And we see that happen. We see that happen. We then, did we get a break of structure to the downside to show that price wants to go ahead and continue? The EQ level is just the confirmation that price wants to go down. The break of structure is the continuation to that trend that's going. So from right now, we filled EQ, which gave us the confirmation that price wants to continue down. So from what we're doing now is going into the 1 minute time frame to look for that continuation to prove that price is definitely seeking to go lower. So from there on out, did we get the touch in? Yes, this is that 5 minute touch right here. After that touch, do we get a break of structure? Well, we didn't need to go ahead and wait for the break after, because this candlestick gave us that break of structure. So what am I doing from there on out? I had just went in with the trade. I bought in here. I gotta fix this. Hold on. Anyways, let me just do it like this. Bought in here. My stop is all the way at the top of EQ because price. If my trade is wanting to play out in my favor, price is not wanting to come back up into this level. If price does come back up into this level, my whole trade is fucked. My whole bias is fucked. I am then looking to see where price is lying in the time frame. But as you can see, after price respected EQ, price does not want to come back up to this level. Why? Because price is showing us off of this EQ that is wanting to go further down. Once more, what are we looking for price to continue down further? That break of structure. And once more, again, after the break of structure, I just waited. I should have entered in here, but waited for some fucking reason or another. And took it to the last part of where liquidity could be lying. And that is that last hour low right here for London. Cool. Then I just waited for price to go ahead and just make its move. What I've been doing as of lately was learning to break even, and this is the fun one, trailing stop loss. So breaking even entails taking risk off of the table once market proves to you that the structure is looking to hold. What I mean by that is, at this point, I'm on the 5-minute time frame. I am on the 5-minute time frame to see whether or not price is looking to control the upside or the downside. Why am I doing that is because with the understanding that higher time frames hold higher power. So if I'm in the 1-minute trade, I'm looking at the 5 minutes to just see what's going on. And I'm flip-flopping between all these 15, 30, 1, 4. And I'll be flip-flopping to see like where structure will be lying just based off of that understanding. With higher time frames hold higher power. Once I get a good feel that price is wanting to go ahead and respect the downtrend, I'm just straight up on the 1 minute and I'm just hunting to see if I could take price off the table. The way that I'm doing that is looking for breaks to structure. So once this low gets broken down and we inverse this gap, it's proving to me that price is wanting to continue on further. Once we get that 1 minute break of structure, to the downside, I completely took risk off the table. Actually, I lied. Don't let me lie to you like that. I am so sorry. I did not take risk off the table completely. I took it off 25%. Took it to that high. And then after that, I waited for another break of structure to show me that price wanted to continue down. Got a low right here. We got this low right here. That didn't give me the break that I wanted. This was the initial break, correct? No, this was the initial break that drove me to move stop, and then we had another break of structure here, which just made me want to go ahead and take profit down. After that, I'm trailing my stop by every single time. The way that I'm trailing my stop is the exact same way I did it with taking risk off the table. Every single time there was a break of structure, I just moved stop loss to the highest high. And then once price went ahead and went back to a break of structure point, I just moved it again. But at that point, I believe I was right here. Yep. This is where I moved my final take profit, my final stop loss. And then with this candlestick, we just kind of busted through a little bit. I must have had a little bit further down that I liked. But either way, trailing stop got me more money than anything. That was fun. So in doing all that gained me $641. That right there, breakdown. And then after that, took it to this low. ES was the leading index to the downside, so I had to have been watching this. When you make a mistake like this, your initial goal isn't to just watch this index alone. You want to watch your leading index, because this index is ultimately going to have told me the future for what this was going to do, and vice versa. Like if NASDAQ tomorrow is leading index, it's going to tell me the future what ES is going to do, until we complete an SMT divergence to the upside or the downside, and then it's reset the game all over again, figure out which index is holding higher power, and then figure out the structure for the trend. But again, I had taken trade. I knew ES was the leading index, but I got too excited with NASDAQ, thinking it was ES, and then when I was already in the trade, I looked to my DOM and I seen that NASDAQ is highlighted, and I was like, all right, well, fuck it. Like, I know what to do here. Just keep watching just keep watching ES. ES is going to tell me what ES is going to tell me what NASDAQ is going to do. And if ES wanted to come up and inverse this gap, that's it. We're done. Like right here, you see that? We inverse this gap, which had price just want to come back up. If that happened here, that's it. Or hell, even fucking here. Like you see it wanting to happen. We were fucking about. Buyers wanted to inverse or do something else. Like my strategy isn't the only strategy that holds structure in the market. There's so many other confluences and rules and strategies out there, but there would have been another indication to see that this was going to go higher. But my indication was telling me that buyers were really going at it with sellers at this time, just back and forth until we got a higher time frame break of structure. Yep. So we got a higher time frame break of structure to the downside, and that was in a form of a 15-minute break of structure, which then just had price shit itself straight to the downside, which then took me out, got my win, walked out for the day. Yada yada whatever. Easy peasy lemon motherfucking squeezy. But none of this, I assure you, none of this would have been feasible if I had been focused and hell-bent on thinking I'm a failure because I failed these two accounts. Thinking none of that would have been feasible if I was thinking I need to change my strategy, or what do I need to do to get better. Like, I know what I need to do better. It had my strategy in the way that I carry out the trade. Well, pause. The way that my strategy is simplified, there is the only room for error that is applied is me. I am the only factor in the motherfucking trade that is going to determine if it fucks up or it does good. Like, I'm the only fucking person. My strategy holds true. My strategy, I don't use, like, I'm not this. I've molded the confluences that I've learned into my own strategy, but ultimately I didn't learn this by myself. I've had another fucking person. I had this motherfucker teach me. Did I pay this fucking bozo $5,000 to go ahead and teach me how to do this? No. This motherfucker put everything he knew about trading on YouTube. It took me a whole fucking year and a half to understand what he was trying to teach me. I can confidently say, with everything that he has taught me, I can go ahead and mold all that shit into what I know, and I could teach you. We're not going there yet. If he can use the exact same shit, the exact same setup that I do, and make money, there should be no reason why I don't. The only fucking thing that stops me from making the money is if I revert away from the trading plan that I learned. The only fucking way. He does not teach to take away your bracket orders. He does not teach gambling. He does not teach how to not be profitable. He teaches people to be profitable. Hell, he's doing a 30-day fucking stream with this motherfucker, this unprofitable shithead, for 30 fucking days to turn him fucking profitable. My strategy works. I just need to go ahead and do the things that make it work. Psychology is the biggest reason to why I am not fully saying fuck this. One, I accepted the fact that I was losing these 2 accounts a long time ago because I don't have the money for it. What I did accept was I can change that within a matter of a few days. Which entails me really just... It shows. It really does show that I gave no fucks about wanting to play today out the way that I should have played it out. Because, simply put, I wanted more money. But I'm okay with this. Although everything didn't play out in the way that I wanted it to, and I made one gigantic ass mistake that ultimately fucked me over, I made several other smaller wins and bigger accomplishments throughout this time. Throughout the last 3 days, I learned a lot. But within the last 3 days, I used risk management so well. The old me, with the stress level that I was under and the mindset that I had, the old me would have just said, fuck it, let's go into this bitch with $300 every single time. Or maybe even more. But this time around, with the understanding of risk management holds key, I need to only come into this bitch with $150. If I go in with $200 or $250, that's fine. But if it's more than $300, I'm fucked. I wasn't risking more than $300. Shit, I wasn't even risking $3. My risk tolerance for the past 2 days has only been $150 to $250. And I played my shit out beautifully. The only thing that really fucked me over was washing my hands, saying, I know this trade is going on, but I'm going to bet anyways. I know it has the opportunity to flip on me just because we're consolidating and not giving any more structure to the upside, but I want to go to bed. That's what fucked me. Sorry, I had something in my teeth. And without that comfortability level, I would have just been able to pass. But looking back on everything, hindsight, I don't need to change anything. I do need to change a few things. I can't necessarily say that with like complete confidence. There's a few things that I need to go ahead and change, but those things are not risk management anymore. And my edge. The only thing that needed to be fixed is the psychology portion of this whole thing. Where fucking 2 months ago, it was risk and psychology. Why am I able to go... Why do I feel like I'm able to go ahead and preach this type of shit? Simply put, I'm going through it. I am living the experience so that way you, hopefully, don't fucking have to. And if you do find yourself in this predicament, if you're watching this, you can go back on this information and use it as experience for yourself to apply. So that way this isn't hard. So that way you don't have to go through this alone and have it to be 10 times harder, and you have to learn this shit by yourself. It is harder to do this by yourself, I assure you. I took this road by myself. It is hard. It is lonely. But if you can really go through the motions and put your fucking head down, I guarantee you, at the end of the fucking tunnel, after everything is said and done, you are able to go ahead and change your future. You are able to go ahead and say fuck you to anybody that actually just wants to like use you in their own way. You're able to do that. Why? Because you have a skill set that makes you fucking money on a day-to-day fucking basis. Like me personally, you don't have to. This is a living fucking proof. Look at that. Let's pause. Let's pause. Where we were at 168. We're almost there. Actually, no, we would have been tapped. We would have been tapped. But now we're down 115. See, it's just continuing. I lost my train of thought. Following the rules. Sticking to the rules. Working on yourself ultimately gets you to where you want to be. It really does. This isn't going to take a month. This isn't going to take a week. For some people, for the people that aren't really on the spectrum, they can understand this and apply this within a matter of 6 months. Within a matter of 6 months, I could teach a fucking monkey how to go ahead and read this chart, understand structure, and how to put yourself into the market the appropriate way. What I cannot teach the monkey is the psychology portion. Yes, I could give you the information that you need in order to succeed when it comes to that, but realistically speaking, psychology needs to be a self-taught system. Because one, you yourself really need to fucking want it. I could want it for you as bad as I fucking want it. But at the end of the day, if you don't want to do anything on what I would like for your future to be, there's no fucking, there's not going to be any action taken upon yourself to do what needs to get done for you to exceed. And there's not going to be any kind of fucking emotion tied to wanting to do better. So, like, you really need to want to change in order for this shit to actually work out properly. You need to sit down with yourself and be like, okay, where am I fucking up? And like, again, this all ties back around to the original topic in the beginning of this. Trading is a reflection of yourself. You can go ahead and use what I'm about to say in real life. You can sit down with yourself and reflect on what the fuck you need to do in order to go ahead and succeed. What do you need to change? What can you do today in order to put one foot in front of the other? What do I need to do in my trading to go ahead and get better? What do I need to learn? What do I need to go ahead and establish? Once you go ahead and self-reflect, that could be like me personally, let me just use myself as an example. Let me just sit back and like reflect for a second. The only reason why I'm truly failing right now, ultimately failing, is because of the psychology portion. Well, let's see, how can I get better with that? Well, we can't just simply say it's the psychology portion, because that's just too that's vague. We need it more like specific. Where am I failing psychology wise? I am either over analyzing what's happening in the market at the time of the trade, when I should be emotionless, and I should be emotionless in the trade. Why should I be emotionless in the trade? Simply put, because if I'm already in the trade, I've already made that decision. I've already put the risk on the table, and there's nothing more that I can fucking do. There's nothing more that I should do to change this outcome. The outcome, my decision is made. I need to go with it. Set and fucking done. That doesn't require me to go ahead and see price coming down, moving my stop to hopefully have price come down just a little bit to come back up, just to have my take profit hit. Or what I've come to see myself doing is completely taking it off the fucking table entirely and just saying, fuck it, ride. Because I want it now. My problem right now is greed. My problem is I want this shit done now. And it's not because I want the riches. It's not because I want it's not because I want all the the flashes and the bells and the whistles. It's only because I want to be able to support my fucking family without Stephanie being the sole provider. I know that I can fucking change that. I know if I could put my fucking head down and make this shit work, I can, within the next 6 months, I could just have her stop fucking working. Altogether. And if I could compound that shit over a fucking year, we wouldn't have to worry about money ever again. If I could go ahead and get this shit right. But that, you see that? Did you just hear that? I just heard it. The emotion tied to the outcome. The emotion tied to the outcome is what's really fucking me over, because I want it so bad. When in reality, it shouldn't be that way. If this works out, it will work out. But there's two things that need to happen. One, I cannot force this to work. What I need to do is apply what I know to have it work. Because if I don't apply what I know to have it work, I would ultimately just be flipping a coin and not having the outcome that I want. Or even worse, being where I am right now and not have anything to make me money. So that right there is how you get better. Reflecting on what you need to do. How do you need to do it? Reflect on what you're fucking up on. Analyze how you can make it better and act on that every fucking day. And this ultimately ties into my real life, because I'm a little greedy. I'm a little greedy in real life. I'm greedy, and it shows in the market. That's another way that I could go ahead and negate any of that. Just stop being greedy. Just be grateful. Be grateful for what you have. Accept it for what it is for today, and understand that tomorrow is a brand new day. Tomorrow is a brand new fucking day to make more money. Tomorrow's a brand new day to save the money that is already in the account. Tomorrow's a brand new day. With that understanding, I probably could have saved myself I could have saved myself thousands. I could have saved myself thousands last night. So, but that's how you do it. That's how you get better. That's how you stick to it. That's how you work on your psychology. And it's not just sitting down one time and saying, that needs to be fixed. You need to repair the pillars every single time there's a crack. If you do not repair the pillar when the crack forms, that crack will deepen. Or even worse, stretch. I mean, deepening is that is the worst of the worst, but stretching too is that's in my opinion the worst too, of the worst of the worst, just because if it stretches, then it's not just in one solid place, it's not in a isolated area, and now the crack it's forming everywhere, and it's gonna fucking it's not a matter of if, but it's a matter of when that motherfucker's gonna crumble. Just because you're not going back and repairing yourself. You're not going back and taking the time you need to just sit back and say, I don't need to trade. I don't need to trade. Or not putting too much risk on the table. Ladies and gentlemen, that is how you work on your risk, or that's how you apply psychology. That's how you do it. That's how you get better. That's how you not fuck up. This is how you fucking lose your money. This is what you don't want to do. This is a very big no-no. Very big no-no. And see, price is coming back up to my area. What I would usually do? Kill it. Why? Because at that point, I'm already break even. That's what I entered in with, I believe. So instead of losing 200, the loss was only, or instead of losing somewhat of like $500, I only lost 167 on that demo account. That's what should have happened last night when I seen $50, negative $50 and consolidating like this. This is exactly what happened last night. You just see this. See that the inverse, this gap right here on a higher time frame is being respected, or it got disrespected, I'm sorry. Came down, came up, inversed it to either have price come down, sweep out this low on a higher time frame to send it up further, or sweep this low to go further down. But if we go ahead and sweep this low to come back up and respect this fair value gap, the price will be looking for this liquidity or somewhere here on a lower time frame. Yeah, like here, or even there, for example. Or hell, it might even just come back up to this fair value gap right here from earlier last night. Possibilities. That's what could happen. We as traders work off of probabilities. Our confluences give us access to be able to say we have a higher probability in the market. Our confluences don't give us a full, like, just because we use this fair value gap doesn't necessarily mean price has to come up here and fill this. Or just because we have this fair value gap doesn't mean that price will come up here, tap in, and come down. Price has the potential to come up here, sweep out the orders up here, inversing this gap, and then coming back down. It has the potential to do that. Or it also has the potential of sweeping out these orders, having enough buying momentum to inverse this gap and then send it completely higher. Only because we've already swept out lower time frame liquidity. So that's how you do it. And I've been ranting a little bit too long. It's been about an hour and 30 minutes. But hopefully that's been enough for you guys. Hopefully that's been educational. That's how you guys do it. I'm gonna stop talking. I'm gonna start doing what I gotta do. Love you guys. Hopefully that was, apply this shit. Apply it.